Yo, what's going on, guys? It's Evan Trades, and I'm back with another educational video for the ICT beginners. And in today's video, I'm going to be going over market structure shifts or break of structures. Uh, you might have heard both terms before in the ICT realm, but they both mean the same thing. And I'm going to be going over that and the difference between a market structure shift and a liquidity sweep, because that is a big question with new ICT traders, and it's very simple once you know. So let's get straight into it, and hopefully you guys enjoy the video. So first question, what is a market structure shift? What is a break of structure in the market? Well, here it is. A market structure shift, when there's displacement, keyword displacement, that's all it is. When there's displacement that occurs over or below a swing high or a swing low, that is when a market structure shift happens. So you have this swing low that's formed, you draw it out, price comes down, displaces through it, closes below it, displaces, and that is a market structure shift. Price makes a low, runs down, displaces through it, closes below it, and that's all it is. Displacement, that is the key thing, and that's all it is. You know, um, a lot of people, a lot of these gurus, they try to complicate it, but it's really simple. Displacement is what will decide if it's a market structure shift or if it's a liquidity sweep. So let's go over this one more time. A market structure shift happens when there's displacement that occurs over or below a swing high or low, and it can change the trend, whether it can be from bullish to bearish or bearish to bullish. And in this PDF, shout out to, I want to say this also, shout out to T Trades for these PDFs. These are not mine. These are T Trades PDFs. He did a good job on these. I'll make sure to put his name somewhere on the screen so you guys can check them out. These are his, these are not mine. He gets all the credit for these, but I'm just using them just for this video just because they are really good examples. So in this case, we are going up on an uptrend, and then this swing low gets displacement through and close below, creates this fair value gap right here, and that would be a market structure shift. All right, now since you guys have a fairly idea of what a market structure shift is, we'll go to a liquidity sweep or displacement, just so you guys know. So displacement is basically an aggressive move up with full body candles, and this can form in a single candle or multiple candles. Generally, displacement candles have a fair value gap present, and that's a good indicator too. Very, very good indicator. Whenever there is displacement, there will most likely be a fair value gap there, and as you can see, it's drawn out here. This swing high gets taken out right here, and there is a fair value gap between these three candle patterns. And I'm not going to go too much into displacement for value gaps right now. I do have a video up, introduction to fair value gaps, if you guys are interested in that. If you do not know that much about the terminology and what fair value gaps are, please go check out that video. I believe I posted about like a couple weeks ago, 3 weeks ago, but go check it out if you're not familiar with that. But it's displacement. It's key to understand what it is and how to point it out in the market. And as you can see with price here, price came low, created that low right here. Price came down, closed below it and displaced through it and left this bearish fair value gap. All right, and then now we're just going to be going in the charts, and I'm going to be going over on the actual charts what a market structure shift looks like with a bullish trend turning into a bearish trend, and a bearish trend turning into a bullish trend. And I will be going over also live examples of the difference between a liquidity sweep and a market structure shift. So we're going to start off with a market structure shift or break of structure, whatever you guys want to call it. It's completely up to you. So we're on the NASDAQ right here, NASDAQ futures. We're on the 15-minute time frame. You can find market structure shifts or break of structures on any time frame. Time is fractal. You can find any type of any of these PD arrays of ICTs on any time frame, but I just like to personally use the 15 minutes. So okay, so let's get back, go right here. It's the perfect one right here. So as you can see, price has come up. We're on an uptrend, we're on a bullish uptrend, and then price starts reversing down. Okay, so here's our first example right here. Perfect example. Price comes up, it's rallying up. Okay, retraces a little bit, creates this swing low right here that we're going to draw out. Actually, I'm going to change that to just black. Okay, so we created this swing low. All right, and keep in mind, for a market structure shift to happen from a bullish trend to a downtrend, we need displacement below and a closure below this low right here. So, and as we get, look at that right there. We get a closure below this low, and we get displacement because, back this up real quick, we get that, and then we get displacement, which creates a fair value gap, and that's what we were just talking about. All right. And that signifies a change in the trend. And in this case, it was from bullish to bearish. And I believe there was another example, so let's see. Right here. So price comes down, price reverses up a little bit, creates this swing low that stands out right here. And then price crushes through it and closes below it. And does it displace? Yes, it does. So keep this in mind, ladies and gentlemen, whenever you're looking for a market structure shift. Keep in mind there has to be a candle close below the low. You can't just see the wick. The wick does not count. You can't just see the wick go over or below the swing low or swing high and just say, oh, it's a market structure shift. No, it does not count. There has to be a candle closure above or below it. And in this case, it was closed below it with displacement. So there's definitely a change in the trend. Okay. So, and let's just see how it plays out after that. Oh, it's the aftermarket hours. I'll try to find another example for you guys. So let me try to find a bullish market structure shift for you guys. Just a really good example. Here we go. Okay. So right here, okay, we're in a downtrend. We're in an obvious downtrend. Okay, making these little swing highs. We're making lower lows. We're making lower lows. I'm gonna draw this out. Making lower lows, so that signifies a downtrend. Okay, and for that downtrend to be broken, we need a market structure shift to the upside. And how are we going to get confirmation that we are changing the trend? By a market structure shift, by a swing high getting broken. So where is the nearest swing high? Right here. It is right here. Just mark it out for you guys. Swing high. All right. Now, let's see what price does. See if we break it. Okay. So, the swing high gets broken, gets closed above, and displaces through. So, we can anticipate, or we can expect this high even before this last, okay, after, I don't know why that took so long. After this closure above this swing high, which creates a market structure shift, we can anticipate that price is going to target this high. So this can become our drawn liquidity. And that's a good confirmation. And if you guys are curious or wanting to learn the drawn liquidity, I also just dropped a video on that. It's currently at like 400 views. So I really love the reach out it got, and I really hope I helped out some people. And make sure to go give it a look if you guys are having trouble finding the drawn liquidity. But anyways, back to this. So market structure shift, closure above, displacement through. Next thing we can anticipate is price targets this swing high as the drawn liquidity, and see what happens. And it does. So it's just as simple as that, ladies and gentlemen. A market structure shift or break structure, whatever you want to call it. Now, I hope everyone understood that little segment on market structure shifts. Now let's look at liquidity sweeps so we can understand the difference. Now, I know I told you guys before earlier, displacement is the key difference between market structure shifts and liquidity grabs, but I think there's a lot of people out there that would rather visually see it than just getting shown a PDF or whatever. So this is a good example right here, actually. Okay. Actually, no. I'll actually, no, this is a good example right here. Okay. Oh my god, I don't know why it's taking so long. Okay. So, back up a candle right here. Alright. So, the difference between a market structure shift and a liquidity sweep, displacement. You're going to ask yourself, was there displacement between this low? If there was, then that's a market structure shift. But if there wasn't, and there was no body closure above or below it, then it was most likely a liquidity sweep. So I'm going to mark out this low right here, and we're going to see price come down here. And as you can see, we're going to see again. So, as a matter of fact, it did close below it, but it did not displace through it. And I don't know how many of you are going to understand that, but in this scenario, there is sometimes it is going to do this, might close just below it, but when you see an instant rejection, retracement higher, then you know, chances are it was a liquidity sweep, because not every time price closes below it, it's a market structure shift. But predominantly, most of the time, it is. Like on the higher time frame, for instance, the 1 hour right here in this swing low, this was definitely a liquidity sweep. As you can see on the 1 hour, price came down and rejected higher on that. So that's why you always want to look at the higher time frames with your analysis and all that. So price comes down, it closed a little below it, but we see that instant rejection. It did not displace through it at all. It didn't displace down. Yes, it did create a fair value gap up here, but if there was more displacement down and created a fair value gap right here as it displaced down, then that would definitely be a market structure shift. So since this was a liquidity sweep, we can expect a retracement higher to at least the 50% or equilibrium of the range. Which it does right there. And to the premium. I will do a video on this eventually, but it does retrace back to equilibrium and this fair value gap. Alright. So move on to the next example of a liquidity sweep. So this is a good one right here too. Right here. So we have this low that's formed right here. Okay, we're going to draw it out. And then we see a little retracement coming down. We see it coming down. And let's see what happens with it. And as you can see, price comes down, wicks it, and it does not close below it. And we can anticipate a little retracement higher. And as you can see, there does happen to be. And let's see if it retraces to at least, oh actually it already did, the 50%. The 50% are equilibrium. But the difference, to put it in more simpler terms, body closure and displacement. Body closure and displacement, that's all you need, ladies and gentlemen. And I'll just say this one more time for you guys. There has to be a close above or below. And I'll go back to, oh, wrong one. There must be a close below the swing low or swing high. And if there's displacement, then it is clear that is a market structure shift. And like I just showed on the chart, if there is no closure and it's just the wick and it's closed above the swing low or closed below the swing high, then that is a liquidity sweep. And you can expect a retracement higher to at least equilibrium or the next than the closest liquidity. So I really hope ladies and gentlemen. I really hope I explained that well. I tried my best. I really hope someone found some type of education in this. I hope I helped someone out. And please let me know in the comments any more videos that I could do to help any of you guys out. And yeah, just let me know. Make sure to drop a like, drop a sub, and yeah. And you guys have a good rest of your day, and I'll see you guys in the next video.